This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus is looking at deepening oil production cuts despite its policy meeting being postponed to this Thursday amid a quota disagreement between some producers, an OPEC Plus source said on Monday. Several analysts have said they expect OPEC Plus to extend or even deepen supply cuts into next year in order to support prices, which on Monday were trading just above $80 a barrel, down from near $98 in late September. An OPEC Plus source said he expected there to be an option for a collective further reduction on Thursday, without providing details. OPEC Plus sources earlier this month said the group was set to consider additional cuts. Oil prices rose slightly on Tuesday due to a weak dollar, and expectations that the OPEC Plus producer group would deepen and extend output cuts due to fears demand would remain subdued. Brent crude futures were up 11 cents, or 0.1%, at $80.09 a barrel at 0510 GMT. U.S. West Texas Intermediate crude futures were trading 4 cents higher, also 0.1%, at $74.90 a barrel. Both benchmarks paired some gains after rising sharply in early Asian trade. OPEC Plus will hold an online ministerial meeting on November 30th to discuss production targets for 2024.
Moving on to the top news in the energy sector.
OPEC Secretary General Haytham Al-Ghais on Monday accused the International Energy Agency, IEA, of vilifying the oil and gas industry, in the latest clash between the groups over climate policy. Al-Ghais was referring to a note published by the West's energy watchdog on Thursday that said the fossil fuel industry was facing a moment of truth, where producers had to choose between deepening the climate crisis or shifting to clean energy. This presents an extremely narrow framing of challenges before us, and perhaps expediently plays down such issues as energy security, energy access and energy affordability, Al-Ghais said in a statement. Iraqi oil officials will meet representatives of international oil companies and Iraqi Kurdish officials in early December to discuss contract changes central to the latest efforts to resume northern crude exports via Turkey, a deputy minister said. Bassem Mohammed, Iraqi Deputy Oil Minister for Upstream Affairs, said a resumption of northern crude exports that have been paused since March depended on renegotiating current production sharing contracts to change them to a profit-sharing model. If we reach an agreement with these companies to modify their contracts, then oil exports will resume via Turkey, he told Reuters.
Next, we have the top news in metal markets.
The United States needs to make quotas for imported EU steel far less rigid, assuming they are extended beyond the end of this year, European Commission Vice President Valdis Dombrovskis said on Monday. Washington suspended import tariffs of 25% on EU steel and 10% on EU aluminium for 2 years from January 2022, replacing tariffs imposed by former President Donald Trump with quotas. The two sides were supposed to agree on measures to address overcapacity and promote low-carbon production, but failed to do so at a US-EU summit in October. Washington has offered to extend the tariff suspension to allow more time for talks. Tin prices in Shanghai fell to a 7-month low on Tuesday due to adequate supply and subdued demand, offsetting support from a weak US dollar. The most traded December tin contract on the Shanghai Futures Exchange lost 3.3% to 193,540 yuan, $27,062.85 per metric ton as of 0441 GMT. The lowest since April. Prices were under supply pressure as domestic production remained steady, plus higher imports, analysts at Hongyuan Futures noted. Myanmar's Wa militia, a main producing region of tin ore, suspended its mining activities in August.
We will now look at the top news in the agricultural sector.
Chicago wheat rose for the first time in 3 sessions on Tuesday as bargain buying supported the market, although improved health of the U.S. winter crop limited the upside potential in prices. Soybeans gained ground on concerns over planting delays in top exporter Brazil, where dry weather is threatening to cut yields, while corn was little changed. U.S. winter crop ratings are better than expected, which has raised hopes for supplies next year, said a Singapore-based trader. But the crop still has to go through the development phase early next year. The most active wheat contract on the Chicago Board of Trade, CBOT, rose 0.3% to $5.62 minus 1/2 a bushel, as of 0336 GMT, after dropping 2.8% in the last session. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.